Alright guys, so hello. Welcome again to another video on Common and Capital. So so last week was the market was volatile, very volatile last week, very volatile. But right now next week, next week Monday actually we have the inauguration news. And there's something I need you lot to understand. I need you lot to understand one thing, yeah. The US dollar is at its strongest right now. That's all you need to know. All you have to have in mind is this: the US dollar is at its strongest right now. You understand what I'm saying? Do not mind the up and down movement. Do not mind whatever your mentors. Do not mind whatever the gurus are saying. Listen, do it for yourself. Do it for yourself. Know this for yourself. I'm stop waiting for excuse me. I'm stop waiting for people to give you a direction or give you an idea of the market. Try to learn for yourself. So right now the US dollar is at its strongest right now. There is no reason why you should buy the US dollar. There is no reason. There is no reason why you should look for buys on the US dollar. There's no reason. So right now the US dollar is at the strongest. If you are a fundamental trader, you would have seen that the inauguration is on Monday, is coming on Monday. The news is coming. The dollar, they already said that the dollar was going to be stronger than the euros. Right now, Euro USD is on its way to parity once again. It did it before. It's going to do it again. The history will always repeat itself. You need to follow the analysis, follow the technicals you see. Do not I understand when sometimes you see some things and you're like, is this gonna happen? Is this really gonna happen? You have to work with what you see. With Forex, you have to work with what you see. Stop trying to fill in the gaps with whatever you think is gonna happen. Work with what you see. I see the market bearish. I see AUD USD is bearish. AUD USD is very bearish. Why? We broke structure on the monthly time frame. On the weekly time frame, I mean, now we are bearish. We've broken below this major area on the weekly time frame. Now, these areas here are my daily zone that I will be entering from, all the way to this level. This will be the end of the zone for my weekly time frame. That's going to be 500 pips. So I'm targeting 500 pips, and I'm going to catch all those pips. I say again, I'm going to catch all those pips, and I want you to catch them with me. I want you to join them with me. You have to understand that this is top down analysis, and this is position trading. This is swing trading. We're not here to make 100 pips. We're not here to make quick 20 pips or two ticks. We're not here to do none of that. We're here to trade like the big boys. We're here to catch the whole move. Listen, if you want to make money in the market, you have to hold your trades for longer. That's the key. If you want to make more money in the market, you have to hold your trades for longer. You have to hold your trades for longer. Listen, I understand, but listen. If you come into the forex market wanting to make money for your bills, you've already started to fail. If you come into the forex market wanting to make money quickly so you could sort this out, no, sort this one out, sort this one out, sort this problem out. No, you've already started to fail. Come in here hoping that you are okay. It's okay not to have nothing at the end of the month. It's okay not to make any profits at the end of the month. Coming here with that mindset, it's fine. You see yourself calm down. You see yourself taking the best trade. You see yourself slowing down. You see yourself not entering premature entries. A lot of people this week, or rather last week, entered prematurely. A lot of people entered prematurely. A lot of people, enter prematurely. So ADSD is bearish. Lower high. We had to wait for the daily time frame to retest this weekly structure right here, and it did. And now we've broken. We've created a lower high again. Now we're about to create our lower low. Our lower low is about to come. We have to know how to catch this trade, this bearish move all the way to the downside. We have to know, okay, when can we enter. We're not going to enter on the daily time frame. We have to go to the 4 hour, go to the 1 hour. Now on the 1 hour time frame, or rather, sorry, on the 4 hour time frame, we could see that the market, obviously, I got in a trade here. I took my money out. I used my last impulse to know my take profit. I took a 4-to-1 on this trade. NFP. I remember, yeah, this is NFP. This was a beautiful trade. I literally counted down the trade, literally. So I was so confident in this trade. Like, you just have to follow the technicals. The fundamentals always follow the technicals. The fundamentals always follow the technicals. If the fundamental is going to go against the technical, it's not going to go against the trend. It's going to have a spike against retail, early entries. It's going to manipulate the market basically, but it's not going to switch the trend of the market. The technicals is king. Technical analysis is king. So I got the trade in here with my perfect entry strategy. I got the 4 to 1, 4% quick, easy. I got that before this retest. I was able to know this because of my impulse strategy. When I most times people, if you see from here, people got in here and they lost. A lot of people lost in here. A lot of people lost in here. But you need to understand that the market moves this way. Look. The market moves like this. Low, low. Then a lot of consolidation. Then another lower low. A lot of consolidation. I hope you understand what I'm saying. A lot of what consolidations. It's not just gonna. Oh my days. Oh no. 1 minute. Oh, what have I done? I just lost my tool. Oh my days. 1 minute, guys. 1 minute. Bear with me. Bear with me. The market is not just gonna move down just because you want it to move down. You do not enter a trade at that level. You do not. You do not enter a trade at what? At that level. This is what the market does. This is how the market moves. Low, low. Goes up. Consolidates. Low, low. You understand what I'm saying to you? This is how the market moves. The market will not just go there because you want to. Then just no, it's gonna consolidate. It's gonna take you out quickly. It's gonna, you're gonna have to, fall into the trap of early entries. Patience. There's a way to do that. There's a way to do that. All you have to do is look at the former consolidation, count the candles or make a box off of it, and then expect the box to be filled in the future. When it's filled, then enter. Patience. The key here is patience. Trust me, patience helps you not see. I was waiting for this. I was waiting for this consolidation to be reciprocated here, right? It did happen, but it didn't give me the entry. So what the market, I was able to avoid this loss. Now the market is obviously coming down again, and we're having a trend line. We're having a trend line right here, counter trend line right here. I'm so sorry the computer is lagging, but bear with me. We're having a counter trend line right here, as you can see. So you can see we're having the counter trend line right here, and I'm waiting for the counter trend line to be broken and the structure to be broken. You need to understand these things. The more confluences you have, the more confident you are when you enter a trade. Sometimes you may enter a trade and you're scared. Oh, news is coming, but I'm scared. Why are you scared? Because you know deep down that the confluences you've used in entering this trade is not strong enough to make you sleep at night. You see what I'm saying to you? It's not strong enough to make you want to close your eyes and be comfortable and dream well and wake up 6 o'clock in the morning, 4 o'clock in the morning to start studying for the market. But no, you have to check the charts every time. Every time. Why? Because you know you're not confident in your trade. You know you're not confident in the entry you've just entered. That is why most people took losses here, and I was just waiting. I was just laughing when this was happening. I was just looking. I was like, I know this was going to happen anyway. Patience. Let the market do. Let the market take the early and the early entries out. Let it manipulate. The market does not really manipulate actually. It is because we lose. That's why we call it manipulation. The market never manipulates. It doesn't manipulate. It gives you the right information, but you choose not to use the information. If the market was giving us, a right information and then doing the opposite, then we'll be like, okay, that's manipulation. But no, the market gives you the right information, which was wait for this consolidation here, this one here to reciprocate here. Right information, but no, everybody got in sales, bearish engulfing. Oh, in session, in sessions, 11 o'clock right here. In session, oh, we're in session, sell, boom, stop losses, hit. And we're just waiting. We're just waiting. We're just waiting. I'm just waiting. Now I'm gonna get into it. Now my entries are coming in. Why? Break of counter trend line, break of market structure. Right here. Right here, break of what market structure. To have an earlier entry on the 1 hour time frame, I could see, the 1 hour time frame has a structure right here, left shoulder. I'm expecting this structure to be broken. I'll set my limit here, set my stop loss right above this 4 hour highs right here. Because the 1 hour is the only get value like you see here. I'll set my stop loss above this 4 hour highs right here. I know this is the 1 hour, but on the 4 hour, this is structure right here. Early entries. That's how I make my pips. Even when I'm trading with the 4 hour time frame, I'm able to catch a 4 to 1. I'm able to catch a 3 to 1, just like that. Let me show you right now. This is a secret. You don't just tell anybody this. Now I don't just place my lines anywhere. You can see they are calibrated. You can see they are run psychological numbers. They're not just ordinary numbers. You see what I'm saying to you? They run psychological. You can see right here, run psychologicals. My TP, this is first TP, this is second TP. When I get here, when I get to the first TP, I'll take majority, stop loss to break even, and I let the rest run all the way to 500. All I have to do is stop loss to break even stack. Stop loss to break even stack. That's all. That's the secret. Stack it. Be patient, stack it. You could listen. One thing you have to know is this: time will always pass. This is something I had to understand with the hard way. I'll be like, how am I going to wait for a whole month to end before I close my trade? But guess what? The month is going to end, and yet I'm still in the drawdown. I'm still in losses. But if I follow the rule, if I follow the idea, if I follow the top down analysis, the way that Paul Willis teaches it, I would be able to make more pips and save myself from early entries and losses. Manipulations, that's what you could call it, but it's not manipulations. The market does not manipulate you when it's giving you right information. We just choose not to accept it because we want to make our rent quick. We want to make our fees quick. We want to make our money quick. No. When I get into an entry here, first TP here, stop loss to break even. Stop loss to break even or past break even. I take majority. Second TP here. But it wouldn't matter to me. When I get to second TP, I take majority again, stop loss to break even, and then I anticipate the next entry. These are daily entries. These are daily levels. So these daily levels are the places where I enter from. Dr. Willis teaches this. This is a very this is an advanced strategy. It works. I'll tell you that for sure. It works. It works. You have to try for yourself to see, because now go no nine no. You understand me? Now go nine no at last. You get me? So try for yourself. This is an advanced strategy. Not just is it advanced, but it helps you relax. Everyone is thinking, oh, the next daily break and retest. No, just relax. Relax. You see, with trading, you should be relaxed. With trading, you should not run out the heck that's get my stop loss. No, with trading, excuse me one more. With trading, you have to be relaxed. Kick back, kick your feet up and just relax. Do not touch nothing. If you must come to the market every day, it is to study the pattern. If you must come to the market every day, it is to study the market, not to press buy and sells every time. That is not how trading works. That is not how it works. You do not come here to press buy sell every time. No. For a whole week, I might not get a trade. For the whole week, last week I couldn't get a trade, but now I'm anticipating a trade next week. Immediately the market open. In fact, I'm going to place my limit right here. So let me show you. Let me show you the entry. I'm going to place my limit right here, but I use one psychological, so I'm going to be using. So look at this. Look at the coordinates. This is how I did. I'm going to be using 50. I'm going to be using 62,050 dollar. So that's where I'm going to be getting my entry from. Stop loss right above the 4 hour highs. If you go to the 4 hour, the structure right here, you never use the 1 hour high. This is something that Bowley teaches also. So I think he would understand what I'm doing. But yeah, so stop loss not random. Also, everything has to be precise. The market does not just go anywhere because it wants to move. No, no, no. The market does not care about your support. The market does not care about your resistance. It does not even know if it exists or not. But one thing the market recognizes is prices. The market recognizes prices. That is how it moves. That is why these prices are here. They're not for decoration. These calibrations are here so the market uses them. Prices. That is how it works. The market does not care if you have support or resistance. It does not care. All the market knows is that it has to go and fulfill prices. So I'm going to set my limit here. Stop loss right above. There's a reason why I use limit. I don't wait for bearish engulfing because I have my break of structure. I have my counter trend line. That's enough confidence for me. I need 2 or 3 confidence, and that's two. So that's all I need. So first TP is 2 to 1. No problem. I take my stop loss to break even. I take majority. Next TP is about 3 to 1, almost a 4 to 1. No problem. I take majority, and I just wait and I just hold whatever is left to the end. That's all. That's all it is. It's not easier than that. That's how easy it gets. But you have to be patient. You have to wait. You have to what wait. Moving forward, So AUDUSD, that's our plan for AUDUSD. This is the plan for AUDUSD and Euro USD. So Euro USD is the next favorite pair that we're looking at, but ADS is what we're looking at. I have a trade open on Euro USD. I have a trade open on Euro USD because you can see Euro USD. You see, a lot of people took losses here. I remember last 2 weeks, a lot of people took losses here because they're thinking, oh, break retest of this place. Nah, the market does not move like that. Be patient. Just calm down. Let the market do its thing. Guess what? I have a mate who said, "Oh, the market is going to break and retest here." I was like, "Just wait, watch and see. The market is not going to just go there. It's going to go back all the way here." But these prices are not just any prices. These prices are calibrated prices. See, 1.04 thousand, see 500, 500. These prices are real prices, and you can see how the market expects them. You can see I've plotted these lines weeks, even not even months ahead of time, and you can see how the market is using them already. And now I'm expecting a break and retest, but I've chosen my one pair. I just need one pair. I don't need gazillion pairs. I don't need to stress myself. Oh, this one is giving me an entry. Let me get no. Just choose one. Just choose one. When you're focused on one thing, every other thing is a distraction. Just focus on one thing. Your USD is a distraction. USD card is a distraction. That's if you're focusing on a pair. AUSD is my pair for the week. Immediately the market opens on Sunday night, I set my limit because my prop firm I cannot hold my trade past the weekends. Bizarre, and I'm a swing trader. I'm not a day trader. So it's bizarre. But it's fine. We'll make do. You know what I'm saying to you? We'll make do. There's always a way. There's always a way. Circumstances are just there to there are waves that take you to the beach. It's fine. But anyway, moving forward. So Euro USD, we're expecting. There's an entry already on Euro USD. I have one pair. I have two accounts. I have one account open here. That the account open here allows me to hold through the weekend. So lucky me. You see Euro USD, a lot of people took losses here. Oh, break retest. 1 hour was giving head and shoulders or double top already. So sell even here we're having rejections. But look, the market went all the way up. Took a lot of people out. Even this candle week here, this week, a lot of people took losses here. I know this. We know this. A lot of people took losses here. I was just waiting. I was just biding my time. I'm just waiting. Wait for the right time for me to pounce. Now is the right time for me to pounce. All I have to do is wait for my counter trend to be broken. It is already broken. Wait for structure to be broken right here. Last structure, and it is already broken. I could just basically execute stop loss right above, hold all the way to first TP. You see what I'm saying to you, but I'm not focused on Euro USD because I have AUD USD to focus on, and that's all. I just have to focus on one pair. Choose. You can see how my pairs are separated. The one, just one pair. That's all. Just one pair. Just one. Trending, yes, there are opportunities here, but I'm not interested in them. No opportunities here, and they are trending. No, not trending. When I mean not trending, I mean the daily, weekly, and monthly time frame are not in sync here. That's what I mean. For me to take interest in a pair, the weekly, monthly, and the daily time frame have to be in sync because that is when the market moves the best. Any other thing is a medium term reversal, and we do not want to be there. If you, we could trade a medium term reversal, but only towards the monthly time frame trend. You get what I'm saying to you? Only what towards the monthly time frame trend. And if you're trading a medium term reversal, you could trade it off of weekly areas of interest, just like Euro USD was for a while. Just like Euro USD was for a while, you could go to the weekly time frame and we see this right here. Just like Euro USD was for a while. You know what I mean? Off of these weekly areas. So it was bouncing, a lot of people were buying. But you need to understand one thing. I tell you again, the trend is your friend. There's a reason the trend is your friend. If you go to the monthly time frame, we've been buried since nothing but did. You get me though? We've been buried since forever. So you can see the only time that the market, rather on the weekly time frame, was swift was when it was falling. Was swift was when it was falling in accordance with the monthly time frame. But when it was going up, when it was having this trend to the upside in the medium term reversal, it was struggling. It was struggling. You take losses here, you take losses there. It's not worth it. Ladies and gentlemen, let's follow. My time is up. Let's follow the trend. Let's follow the trend. So do well to subscribe. I have no subscribers here, but it's fine. It's a new channel. We're here to grow. I'm not here to show lifestyle. All I'm here to do is to untangle your mind, show you that Forex is as easy as it gets. But after a while, subscribe, turn on post notification. See you. Ciao, ciao. Have a blessed week.